Hey guys, Josh again here from helping you guys help be more financially conscious with your money. Just reiterating some of the credentials there. Ran more than $250 million book in the past. Worked at Merrill Lynch, Fidelity, a little over 10 and a half, 11 years. Worked with thousands of clients here. And one thing I noticed that a lot of clients were taking advantage of, I've told friends, family, I do it myself, utilizing money market funds for additional, savings you may have or crappy CD rates that you don't want to use anymore. Because a lot of companies they offer what are called retail or brokerage accounts, where they're just regular individual investing accounts. You can have a joint account with your wife or with a kid or whoever, or your husband. And what they do is you can either invest in stocks or bonds or whatever you want, or you can move it over there and utilize what are called money market funds. I can't go through all of them because there's thousands of them. Well, I don't know about thousands. I know there's hundreds of them because every company has its own. But I'll just give you an example. When I used to work at Fidelity, they had their own government money market fund. And as of today's date, they were paying a little over like 4.7% in cash. So where maybe a checking or a savings account is getting you 0.1 or 0.2%, which is basically nothing, you can move funds over into your brokerage account, leave them in cash. It'll go into a money market fund or buy the money market fund, and you'll be getting a much higher rate. It's liquid, so you can take the funds right back out. It's not invested in the markets. And let's just say, for instance, an example I did with my dad, moved over $25,000 he got last year. I'm not going to mention the bank, but he got $25.75 on his $25,000 cash position in his account. And about a year ago, he moved over some funds, and this year alone, he's going to be getting let's see. So instead of getting 27, 28 bucks, whatever it was, on the same $25,000, he is going to be getting about $1,187 in interest this year, which goes right back into the account, reinvests back into the money market fund, and gives itself more money. There is no downside to it. You can freely move the money back to your checking or savings account if you need to pay bills and things. A lot of companies like Fidelity, they're awesome. They will give you what's called a cash management account where you can even write checks or use a debit card right off of that account. Utilize money market funds. They will help you in the long run. They diversify your assets. You're able to freely take funds in and out. You can invest if you want, but look at the difference, $27.50 or so, or $25.50, whatever it was for my dad for a year, versus $1,187 on the same $25,000 of cash that he moved. It's a no-brainer. Utilize those money market funds. They will help you in the long term, and they are very beneficial. Call one of your local companies. You can put some comments here. I can try and help you out the best I can. I'll answer as many questions as I can about them, but look at different places. Again, I'm only utilizing Fidelity because I know them. I know they're a great company. They're privately held, so they never really look out for shit. They're not worried about shareholders or anything. I know that they did what was best for me, did what's best for their employees and clients. But I will say, like I said, like for the money market funds, it's a no-brainer. You are only hurting yourself by not utilizing. So look at the different companies. Again, Fidelity Government Money Market's a really good one. There's plenty out there. Put some comments in there. I can always help out down the line. I hope this helps out, guys, and take advantage of all the aspects you have in the markets.